Before we get into what's going on now, so do you agree with me that actually it's the oil price that is more volatile? Because you might argue that your travel and leisure sector is actually as volatile and actually has a greater beta react or greater knee-jerk reaction to what we're seeing on COVID as well. The travel and leisure sector is going to get it on the chin today, isn't it?
I mean, it's been a pretty mad couple of years in the travel and leisure sector. We've seen so much volatility, and here we go again.
Here we go again as well. Look, will the whole sector sell off aggressively today, in your mind, or is that just a hope actually that people will look at it and just say this is about exposure with Southern Africa? With the whole, given what you've seen in previous waves and previous variants, you think the whole sector is just going to get it very, very aggressively? If so, is there an opportunity to buy, or do we need to stand on the sidelines?
Well, what I would say is it's been very clear pent-up demand. If you look back over the last summer, when people had the ability to travel, they went out and traveled. The trends that we saw, particularly in domestic hotels, have been really, really strong. Now, as we think about the most kind of recent concerns, I mean, clearly that's going to impact people's sentiment. But we've been here before, haven't we? There's been the Delta variant. We've overcome that. Travels continue to rebuild.
I hear what you're saying about we've been here before, but every time we have one of these shutdowns of the industry, or partial shutdowns, or actually maybe an abating of that demand picture you just mentioned because of concerns about putting your family on a plane and travelling to airports as well, that's created more debt, more stress on the companies, created more problems on the hotels and their debt load as well. And I'm just wondering, are some of these companies which hope they've seen the worst, are they creaking on their financial fundamentals at the moment, and of course their huge debt structures now?
Well, I think a lot of that has been resolved. If you look back over the last year, you've seen a lot of capital raises, and the companies we cover, I think, have largely patched up their balance sheets. There are one or two exceptions, but largely a lot of that work is done. Now, if we go into a much more significant level of new restrictions, then it's a different story.
So you sound really constructive on the sector, actually, I've got to say, James, as well. So where are the best opportunities for our viewers?
Well, I mean, I think if you look across the hotels and leisure sector, there are some strongly improving trends. I mean, the cruise lines is an area that we think is very interesting. It's been left behind in the early stages of the recovery, but the data we track is starting to look much more positive.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.